it's all about the freedom and independence, to do what you really like. And I don't think 9 to 5 job is a good way to go about it. So, I mean, that's my perspective.
Okay.
I did have a portfolio in Toronto. Owned a few houses there, which I've sold off recently, which is the reason I was so busy. So now I'm just looking at new ways to create income, whether passive or active. Portfolio in Toronto.
Yeah.
Owned a
So,
few houses there,
you know,
which
thanks,
I've sold
Ryan.
off.
And what I for is I'm making it live on Facebook and I mean on YouTube, and we're just bouncing it back. So thank you, Ryan. You and I met way back when we have a live meeting, and you come to quite a few of my meetings. It's good to see some familiar face, and it's also good to make some new friends too. I'm going to turn it on to Aaron. Um, if you want to speak, do you speak? And if you don't speak, that's okay. No pressure. Just want to get to know each other.
Yeah, no, absolutely. So yeah, my name is Aaron. I'm also based in Calgary, originally from Vancouver. Obviously interested in real estate investing. I think that was one of my main objectives, like Rahul mentioned, in terms of getting something started on the side that's more passive, in addition to supplementing your 9 to 5 income. Currently work in Chestermere. I stumbled upon your Hay2Brick. I don't know if it was a LinkedIn ad, but I saw a stat that said average price of one door in Calgary is 200,000, and the same price is 30,000 in the Midwest US. So that statistic sparked my interest, and I thought I would join a meetup and see what this is about.
Hey, welcome, Aaron. Funny thing is, I do this for a few years now, and at times, I share with you. At times, I feel like you're in Chestermere, so really close. I'm in downtown. So one time, I because of like doing meetup like this, doing meeting like this, sometimes you just basically retelling your story. And why I'm saying it is actually whatever you shared with me, that was basically one of the earliest meetings material that I sent it out, and basically it's a true. Like in Calgary, I just last check is 160 200,000 per doors. It's not the most expensive in Canada. That's a crazy part. It is. Even at that price, it's not expensive comparing to other cities. And you're right. I'm still seeing. I just make an offer 35,000 doors in US, and maybe it will go higher, but it won't go 60. It won't go hundreds. Maybe close at 45 per doors. I'm talking about. And when you factor in the ratio, it's just the ratio between rents and the price. So what you're mentioning is really right. And I would love to share more as we go in the meetings about my story, how I started, how I started back in the day, and go to the multifamily space, and we can connect more further after this. But thanks very much, Aaron. I appreciate that.
Thank you.
Hey, is it Sanyam?
Yeah, it's Satyam.
Satyam? Hi, how are you doing?
Good. How are you? Yeah, I'm based in Vancouver. I'm in grade 12. Just trying to learn more about real estate and specifically about multifamily. And yeah, that's the main reason I'm here. And yeah.
Hey, welcome. We need young people like that. The future is for the young people. That's it's we all know that. And welcome to Manila City doing this with time zone. You didn't miss the meeting, so welcome you and and let's connect after. And Chris, if you want to speak or you want to, here you go. Let me know.
Hey everyone, how's it going?
Great, how are you?
You hear me?
Yeah.
Yeah, perfect. Yeah, so I'm in Calgary as well. Sorry, I'm just in the car right now, but I'm just about to park. I'm a commercial property manager. I've been in real estate for a number of years, but I'm really taking a strong look at multifamily right now. I'm originally from Saskatchewan, and I'm kind of looking at some properties there, but this whole, investing in the U.S. has piqued my interest, and so I'm just curious to have a look and maybe meet some like-minded people. So,
hey, welcome, Chris. And I think I'm pretty sure I saw you. I could be mistakes, but I think your last name ring a bell. You probably have to come to one of tries before, and we haven't have a chance to talk. But I want to take the time to say thanks, and it's a small group, and I didn't actually expect we have a lot of people today. But hey, we're here and we're gonna connect. And as you know, meeting people and that's marketing in general is going to be an everyday thing, and you can't really put a pause, and it's an incremental thing. So I looking forward to meet all of you guys in persons when this is all getting better. I was actually coming back from US 2 days ago. I'm in my home doing my self quarantine thing. But yeah, no, it's why I share this because one thing that all you guys touching on is what is one thing that's also amazed me. I remember back in the days, 2016, well, actually 2012 is when I started to the US and buy single family. And then 2016 and 17, and when I started looking at the multifamily space in the US, all you guys talk about is true. There's a lot of tensions going to the US. And I remember back in the days, a lot of people asking me, so you can't go to the US and so what is the risk? Is how do you deal with the currency, deal with legal stuff, how to deal with the currency stuff, and to being a team and you're totally different country and all those things. I'm just seeing a pleasantly surprised that people are actually asking. Well, you say that pleasant surprise because people pay more attention. You paying 1/3 or 1/5 of the price in even in Calgary market, and Calgary is not by any means cheap. You talk about 3, 4, 5 cap, 4 cap, 4, 5 cap, and those financial is not even real when talking about. And if you look at the commercial listing in Calgary, or like I should say, not completed. So, and when you compare to the US, you can still go to the Midwest market, you can still go to Florida and so many markets. I was in Texas, and you can still see 7, 8 cap properties. Apparently, forget about all those things that we talk about, all the challenges in terms of legals, in terms of different market, to learn all the things. We talk about investing. So the number has to make sense eventually. So that's why I set up this group. That's why I set up meetings like this to connect with Canadians or US people. A lot, my market's in US, so a lot of US group people come to the group, just trying to network. And it's trying to network, trying to build something that as I said, I started doing multifamily in 2016, 17, and bought my first properties in 2018, and finished refi last year. And I want to share what I know a little bit. I don't know, not only from a US perspective. A lot of US people have done that multifamily, but how do we do that as a Canadian? Maybe we partners. I certainly partner with Canadian investor myself, or maybe you partner with local people. I certainly partner with US friends, and mortgage brokers, and you have to kind of build all this. It's no different from what you would do, I would say, that to build your team in Canada, to hold a fund from Canada, except you are doing a different legal system, different country, and probably the legal structures, because you're basically mirroring up the Canadian side investors, and to get them to invest with you and in the US deal. And you have to travel to the market. Of course, you're buying physical properties, but other than that, at the end of the day, it comes down to what kind of growth, what kind of return. We're doing investment, so a lot of investors looking at investment. But I get you. For all you guys come to the meetup group like this, you have the mindset, you can find better return than in Canada. You can find better return than some of you guys in Vancouver, or we're from Vancouver, so all went from Toronto. So how crazy it is to buy product that doesn't make sense, other than hoping the appreciation will happen. So I don't invest in Toronto. I don't invest in Vancouver, but I know those two wouldn't make sense. That's why I make group like this, and that's why I keep marketing group like this even for a few years now. I'm seeing more people to latching on, so to speak, to the market. Actually, right now, if you pay attention to the news, if you pay attention, you don't have to pay attention to even commercial people. I'm connected to commercial brokers. I see deals on a daily basis. But even if you're looking at the news and the US market is going to be appreciated, right? And I don't get me wrong, some people will not agree that, but I'm hopeful, and I'm looking at Canadian market and looking at US market. It's much more stable market as far as I'm concerned. The rent still support the price of the real estate. There's no metrics you can try to understand and buying properties in Vancouver or Toronto with the rents that they're getting comparing to the price. That's risk. That's how I look at it. That's how I look at it when you're looking at why I believe US have a much better banks for our money. So I don't know whether you agree or not, but I've been doing this since 2012, and I've been making good investment decisions since that, and make some bad decisions, right? You all learn, but it's come down to knowing what kept you going in, right? And some of you are students, some of you are starting, some of you are veterans, some of you are commercial people. So it's come back to what kept you going in and what kind of things that you can do to your properties to improve the rent and hence improve the equity. So so feel free to chime in. I know you guys are all male, but I actually. So does it all make sense, guys? So
Yeah.
I'm actually debating. Thanks, guys. I'm actually debating. So one thing about investing in commercial is there's two things actually. I have two presentations. I can show it to you guys, and I'm gonna don't really mind which one I show. So I'm gonna show you my slide deck, and reason behind that is, well, I want to market my company. That's number one. And number two, I just want to show you, no matter what you do, you have to have this kind of slide deck, and I freshly created. I kind of actually want to test it and kind of want to see your feedback, or I can have a topic that I because there's a lot of new people here, and that's why I'm asking you which one you prefer. I'm really liberal. Let me see. I have a presentations talking about hang on, raising capital. So both of those is actually about raising capital, by the way, guys. One is longer, one is shorter. So I can show you really good presentations of my company, and then you guys can take the notes and maybe something you can do and steal it and or like copy it, whatever. Or I can show you one actual slide deck that I think is really good because that's kind of summarizing how when you talk to the investor, what kind of question, what kind of thing that they are thinking, and it's a learning process. So raise your hand is number one or number two, just quickly. So it's a slide deck that I did for my company, or is it presentations? So which one you prefer? If you don't choose, within 5 seconds, I'm gonna pick it for you.
Just to chime in quickly, I think I don't know, for me at least, a high level overview would be pretty nice.
Perfect.
Just to see
Gotcha.
versus being specific on raising capital. I think the business as a whole would be beneficial just to gain an idea of what you're about.
I would do that.
Yeah,
So-
same.
So you guys see this?
Good.
Yeah.
So Hay2Brick is my company, and I kind of like this slide because it actually looks way bigger than who we actually are. Showing the one thing that I did at the end of I think it's like at the end of last year, coming out from partnership, is I have hired a company to do this slides, and I kind of like it. I have to be honest, I haven't actually presented other than want to try. So I'm gonna do a dry run. So bear with me if you this is the first time seeing it. So who we are, right? We're Canadian-based company, number one, but we are a real estate company. We're based in Canada, Calgary, like you guys. But one thing we do focus on is we focus on multifamilies. Like a lot of investors, we started our single families, and it was 2006, and we bought the first condo in Calgary. Last time that I checked, that condo hasn't appreciated, and even though it's 2006. But my stories go back to 2012, going to Phoenix, buy my first single families. And but it's come down to when we do multifamily, it's come down to scales, it's come down to scalability, come down to knowing which market you can go into, which is US, that we eventually figured out, if you're going to be investing in scale, you also have to invest in the market that can give you the return for your investors. So we like to say that, so the logo that the picture that we're showing on the top right hand side is actually one of our buildings. So it's the B4 picture buildings. So we would like to say that, if you're going to stick with, there's a really long saying that create a repeatable, scalable strategies. But what we're trying to say is this: if you stick with your metrics, if you stick with, for example, our market is a C properties market in the B areas. If you stick with those kind of metrics, you find the properties and you buy it correctly, even though at this market, and that's really getting harder and harder to find good deals, even in the US, believe it or not. And if you stick to those metrics, and you can create a return that you said you're going to do. So that's basically a long way saying that stick with your metrics. If you're going to buy C properties in Bay Area, stick with that. And it doesn't matter if they offer 20 times a month or 50 times a month. Stick with that, because eventually it comes to you. But that's kind of how you basically be able to create a return that you said your investors need, and stick with that and not losing a shirt. So we partner with other people. We partner with, when one thing that we said that we go to US, one thing you have to be really cognizant is you're dealing with different countries. So you want to work with big company like Allen, big company like Lockmart, the security capital in US 5, and to work with lawyers firm like Allen. So basically they can able to create the legal documents when you create a fund or we create the syndications. Bring along investor to be able to, whether they invest in RSP funds, which we are going to pretty soon, or cash in the Canadian soil, and marrying that money up with the US investors. Okay, let's go US investors. And how do you structure it? We got that going by actually working with legal firms that have a good size, have a legal team, have a tax advisor within the one single roof. So that helps. And of course, you have to know when you go in the US, you have to find a good business insurance company, so we're able to insure your properties. So this is not exhaustive list. You have to have a problem, just like whatever you do in Canada, you have to have the legal firms, property management company, and money partner. That is not money, it's money partner. So we have ours in the US as well. Let's do this. So we like to say, in Hay2Brick formula, we like to say there's a lot of things you have to do, but ultimately you're looking at this wheel, and that's what I want to. That's 100%. When I go through my meetups, when I go through to talk to people, there's a few things that you have to do. But when looking at multifamily, it's no different from what I've been telling my investor. You have to find the market, identify key market, before you're going in. And you don't stop understanding your market, even though you are, let's say, my home base is in Ohio. It didn't stop me from going to other market, actually learn about other market, and then you get a better understanding. Is it the best market you can do? So one thing that I just did when I go to Texas is, is a really great market. Everyone's saying a great market. But one thing, eventually you have to figure out whether that market is for you or not. So long story short, we focus on Ohio, we focus on Midwest, Indiana, Ohio, and Kentucky, because that's where the region that we know we have a relationship with, the building that relationship. We're looking at this key. One thing is about operating excellence. Operating excellence meaning that you can actually manage the asset in an effective way. And one of the way that you can only do is actually you're geographically located with your master of your properties, right? So number one thing is identify market. So some of you guys may know us that we are active in Ohio and may not know, but that's what we do. We actively engaging in brokers to get the deals that we can find those $30,000 deals that Aaron's mentioned that with a mortgage broker, with a property real estate brokers. And then when we identify those, when we close, so a few things we want to do. So we find the properties that have the rent growth that we can improve the equity by increasing the rent. When you find, let's say, when the market is at $500 for one bedroom, so we find those properties, and that's what we do. Whether it's $350 or $400, then you have rent. You kind of discrepancy from your combinations, and that's what I mean by capital improvement. So you put in $3,000 to $4,000 or $5,000 per doors based on your budget when you're doing the due diligence. And To increase that, it's going to be let's say if it's a 50 unit apartment, then it's going to be 12 months for the renovations, and then you stabilize for another 6 to 9 months, and then the bank want to see your stabilized returns for the next 3 months before you're going to be fined or you're going to exit, or the next buyer is going to come in and buy the property from you. And that's when you when you see that what I described, with identify the properties, identify market, have potentials, have the rent increase that you can go in and do the work and stabilize and refi. Okay. And then in the midst of that, obviously, you have to have a local property management to operate it for you, right? Because you never, as investors, we're not local, we are not property manager. So remember the last slide that we have property managers. So you would like to do something like that if you're going to create something like it for yourself. But we partner with local property management company to basically make sure that the asset is maintained in a prime performance, and the cost is going to be within the parameters of the expense. And so you basically hire the local management company to do all those. And then at the end is the value creations. So we say 1, 2, 3, 4 is really comes down to that, find the properties, increase the properties, maintain it, and then stabilize it, and then create an exit. That's what we do. So I show you this one simple example. That's what we did in 2014. And here, so we bought a six buildings, 48 units building at under market rents. It's 375. I don't know whether to show it here. It's 375, 350 on the right hand side, average, and then we increase it to 525. Increase. In fact, the rent. This is old too. The rents right now is at 540. So so the difference of $20 is a lot. So I'm going to show you later on if we have time. So we purchased 1.3 and the refi is 2.15 within 24 months. So the stabilize, the work doesn't take 24 months, but again, you take, let's say you're going to renovate 4 units every month. So sometimes you're going to quicker, you can push it. In fact, you should be able to do a 50 unit, give or take, and one thing about that, you don't want to do too many of those because you're paying investor cash flow, right? At the same time, you want to do more. So that's a balancing act. That's what I'm going to say. You want to get too empty, but you want to do quicker. Because at the end of the day, you're trading off the first year cash flow, which obviously you're doing the work, right? But remember, there's a turn of money, there's a turn of money concept here at the play. The quicker you can turn this, you can kind of forget. And as soon as you can budget the cash flow, you have to pay the investors. Okay. So, and then you hire the property management company, and then so one really key thing is all these things is you're going to need to infuse capital too. So you improve capital by borrowing the money from the bank. Okay. And putting a new roof, putting a new HVAC, new unit, new amenities, not amenities, new amenities, in unit amenities, I would say, doing the lipstick things, and then you rebranding it, and right, you see that there's the same sign that I'm showing you here, but it's just rebranding it from Amy to Springbank Estate, a new property management company, and then in fact, one thing that we did not budget is actually it has been almost full. Well, the economical occupancy is full, but that some of the people not paying rent. But in terms of the physical occupancy, so physical occupancy is full, but there's some people that's still behind rent because we're still coming out of the pandemic. By the way, there's no way that we would guess that it will happen. But I would say there's a side benefit of investing in multifamily is during the 08 time, let's talk about history. A lot of people talk about the 08 time, the GFC, the great financial situation is single families take the biggest hit. And this is not about single families investing, but I'm just like to touch on, multifamily didn't get hit so much at that time. And all this craziness in the market, we all know this movie is not, we have seen this movie before. It's come down to, at the end of the day, can the property pay the mortgage? And that's what when the property when the value is going so high on the single family side I'm talking about, and that's why people go to multifamilies, because if you have 80%, 70%, you can still pay everything. You're probably not making a lot of money with that, but you can hold on to if the market would drop. And I'm not saying that it will, but we all seen this before. If the market is keep going up for the next 2-3 years, the risk of all this going to have adjustment is going to be getting higher and higher. But coming back to this, so this is a track record. This is a proven example of what you can do, what we have done, and we partnered with investors from Canada, from US, and increasing the rent again, purchase right price. You know, we purchased $28,000, and we refied it. You know, in that case, we refied it, and you can sell it. When you refi, obviously you have a whole bunch chunk of capital to lock in the properties, and it's still appreciating. Like the rent is still going up. So so that's what we do. That's what you can do if you partner with us. So I'm just showing an example. When we partner with investors, we this is, you always have to have an idea what you can do, because investors are going to say, what is the return? So we create a graph to answer that question. When you put in $50,000 and in this US fund, and you're gonna hold the properties. We're gonna hold the property for 5 years, whether you refi or exit. Okay, so the invested capital is locked within the properties, within the companies for 5 years, so that we have enough time to do work. So at the interim, so we provide in this case 7%, and that's what we're always telling investors. 7% is good when we look at competitions. When we look at competition in Canada, when we look at competition in US, I know it's a good return, because the going rate market is about 5 or 6 from some of the deals I saw, and so 7% return is what we promise our current investors on project like this, and we'll be on project next one as well when we go in, and then at the end of that, that's 18%. Okay, so that's, let me move this so that I can actually show that. So that's 18% on the right hand side, 18% per year. So all of a sudden, when you minus 18 to minus 7 minus 18, 18 minus 7, that's your 11% at the end of it. So 11 times 5, which is 55%, which is what this blue or tier column showing you. So at the end of the day, you're getting 90% return for your 18% per annum return, but you're getting cash flow, 7% cash flow during the holding term, because the property cash flow, when you buy in the market that we participated in, when you're buying at 7, 6, high 6, 7 cap properties, and when you increase the cash flow, that's where you can get 7% cash flow for your investors. And then the back ends and how we're going to achieve the 55% is when you refi. You obviously you increase that. In our case, in your example, in a track record, show you that you increase the 60%, 70% increase of equity, and when you take the new price, the final price, and refi it, then of course you can share the capital growth with the investors. That's how we do it. I think next slide is the same, but it's showing different figures. Again, it's 100,000 US, and then everything, the percentage is the same. But of course, the total return is based on percentage of your investment. So summarize, 5-year term is what we do with our investors. And during the 5 years term, you're going to have 7% distribution cash flow, which is 35% for each year, for the 5-year hold. And then you have 11, so 5 to 7, 11%. So in our example, that way is 11% subject to market. And then option to reinvest after we do our first project. We're actually doing that with our first investors to go on to actually buy another properties. So that's some identified investment that that is not those property anymore, but we have some things that's going on. So but what I'm trying to identify, what I'm trying to share with you is we're constantly doing different projects, we're constantly looking for deals, and it's related to how you can build your relationship in the US. And that's why having a deal flow is really important. That's like we have 7 brokers that we have relationship with, and also a handful of others that we don't have really good relationship, but we deal with all those to unleash whether it's off market deals or on the market deals. So this is supposed to be video. You can't really play that on the slides here. So, and then we're going to go over FAQ. So is again, to summarize it. So that's a tax implication. Of course, we're doing U.S. investments, right? And that's a 5-year term that we're going to be holding investor capital during that times. We tell our investors that, and that's a 7% cash flow that's going to pay per quarterly. So it's 1.75 for the year, and that's why 7% for 1.75 per quarter, and that's why 7% for the year. So, and then you basically got 20 checks. If you look at the graph that I showed you previously, there's 20 checks, 4 checks a year, 5 years, so 20 checks. So we got that a lot, is the investment guarantee. So the investment is never guaranteed. We even share that when we sign our investors, that it is LP investments. So LP meaning is limited partnership investment. You are putting your investment fund into the limited partners that limited partnerships created in US and Canada, depending on who you are. If you're US investors, you put your fund into the US limited partnership. If you are Canadian investors, you put your funds into your Canadian limited partnerships. And just so that the reason we structure that way, because when you create 2 tiers limited partnership structures, the company holding the investment is also acquired the company that you're investing in, which is the LP, and the company owning the properties is also the LP. Is a flow-through structures. Flow-through structure meaning that when you distribute most of the return coming back to you, then the tax is minimal, right? And when we distributed most of the cash back to you guys, it's flow-through, meaning that you will get minimal taxes. Basically, it's another way of trying to limit the tax because you're investing in the US fund. So, but long story short is the best way to be securing your investments basically is you're investing your money into the asset that's holding the limited partnership, holding the apartments buildings. You're not investing in Hay2Brick, you're investing in that special vehicle that is holding the properties. So that's what I want to show you, like, the short and sweet presentation. I don't think I've shown this presentation before. And so you guys said that, show you the general presentation, that's where we're at. And but again, when we do a presentation, when we talking about with investors, when we talk about with partners, sometimes we show this, sometimes we don't. But this is kind of the nutshell of what we do. You find properties in the right market, you partner with investors to provide a good return, and to buy the property that have that you can go in at $30,000, $50,000. I think it's pretty obvious when you can buy those kind of properties and comparing to the local Canadian market. And I don't even know what's Vancouver multi-family prices. I'm pretty sure it's higher than 160,000 per doors comparing to Calgary price. I know that's in between. Calgary is about 160 to even a little bit higher, even in this place. Why I know? Because everything is appreciating, especially in single families, but definitely is going on to the multi-family as well. So again, so we believe having a track record is really important. Having a team is really important. So if you guys want to learn how to do it, even not learn to do it, or want to partner with us, so we would be happy to check them. We're happy to connect it and send me email and connect me, and would love to share with more of you guys. And that's it, guys.
Howard.
Hey, Ryan.
Hey, I have a question. So you mentioned about when you invest in limited partnerships. So say if an investor wants to invest with you, he has to have a limited partnership structure already in place as a corporate, or
no. So no. So we set up the limited partnership structures. So the investors actually is by by investing with us, you basically you will sign what we call the subscription agreement. And when you sign, you're basically investing in that limited partnerships. So think about limited partnership is a structures. Okay, this is a structure, it's a company. Okay, and then underneath that is the property is owning, like this limited partnerships owning the properties. And as a manager ourselves, so we manage the properties by being the GP of this limited partnership structure. So we're here with GP, and on top, that's where our investor coming in to invest in this limited partnership structures. So the investors is by the name of that is called either members or more fancy names, limited partners, or they're just investors. So you don't. So to answer the question, you don't have to be anything. In fact, we are working with our U.S. lawyers and accountants to make it more seamless when you, as a Canadian, investing in our properties, investing in our deals, so that there's less work you have to do, right? That's what I'm trying to say. We are having a structures, and we're working with a existing structure doesn't we still requires you to file the U.S. tax, but we are working with one new structure that you don't have to do it. And if you want to learn more, I can share more of that with you. Basically, sheltering you from exposing your in US, you know that there's a thing that's called 5 million. I think that's appreciated a little bit, 5 million net worth thing worldwide. And if you're just investing 1 or 2 deals here there as a limited partnership, what I'm saying, if you're not like me trying to set up a whole company structures, you probably want to limit your exposures to the American government. Let's just say that, right? And less exposures to the IRS in the US is much more favorable for you, so that they don't tap you on. It's just make it much more easier as an investor, as a person, that you don't have to file US tax. And we're working on that.
Yeah, and you also referred to TFSA and RSP. That's a structure you may look at in the future. Is that?
We're doing that in the next deal, so it's gonna take some time. We launchers, if you realize that we never do that before, it's always cash basis before, but we, as you know, we talk about like you and I met like probably a year or a year and a half now.
Yeah.
At the beginning, we didn't do it, but we turned down so many investors that way, and one we listened, we learned that in fact, we are saying no to a lot of investors, and we got to stop that. And so, long and short is we know how to do it, because this is from day one. We know how to do it. The difference is we didn't know there's a demand for that before that, so we didn't go and spend because we talk about different structures, and it's more costly to accept RSP money. From setting up the structures perspective, long and short is yes. So we're going to do that in the next one. If long and short is come down to, let's say, setting up normal structures is 20,000. If you're setting up our let's just say that we call it TFSA, registered fund, RSP, REF, all those things, which just called registered funds. It's a different structures that just need, to give you an example, it's not 20K, but let's say it need way more legal power to creating that. And that is that we know that when we just need to make sure that's enough demand. But long and short is yes, we're doing that.
Okay.
Yeah.
I guess with the prime rate in the US being 0 until I think for the next few years, how do you think that's going to drive the demand for your investments or the capital growth?
Very candid questions, Ryan. In fact, so let's just segregate it, real estate into different buckets. Okay. So, and let's just talk about residential primarily. will, and then we talk about markets. So let's just talk about single family versus multifamily. Let's just like, probably the whole house people, right? Um, they're a little bit different market, but I think from so don't get me wrong, all across real estate, whether single families or multifamily, is very hot. Like in terms of it's really competitive to find good deals. It's getting harder, but um, and you're right. The single family market is primarily fueled by I would say, like, there's some investor, but there's also homeowners that is going to refinance the loan in the U.S. and Canada. It's kind of like that, the same, and keep buying until the interest rate is going to go up, right? And when they're doing it, so they don't necessarily looking at whether the rent will support the mortgage. Sorry, we support the mortgage, support the expense, because the expense, um, you know, when you're single family investors, you don't hide out everything. You don't when you can't you're not managing as a 50 or 100 units property or 20 unit property. You have to make sure the work need to get done, right? I'm talking about. But what I'm trying to say is what we're seeing right now with the crazy amount of demand on single families, um, potentially it is more risky than commercials, like in apartments, because think about that. You know, if when everyone now go into COVID, we need space. I know that's a new demand, but don't forget is apartments and rental is always a cheaper alternative for investor to invest. So there's more demand, and also for tenant to living in. So one thing that we realized last year is A-class apartments was having so much trouble because the A-class apartments, they are and they are like those people, they trying to merge it to B class and pay less rent. And that's the same as the B class going to the C class property. And that's explaining why a property is actually 100%. We were not knowing that. But one thing that we realized is this is actually the same movie as what we saw in 2018, I mean 2008.
Yeah.
Yeah, and 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 apartments during that time were lower, but there's no way comparing to the single families completely meltdown. Because honestly, when because primarily single family buyer, there's still a lot of them, they're not investors, so they will, they lose their money, but they just exit, right? And then they don't have, maybe that's also another way to say that's less sophisticated. They're buying it for appreciation, for speculation. But when you're buying a multifamily, and it's get worse, but most people, they will have a few partners, so they have bigger financial strength, they bigger hold and a bigger holding power, sustaining power. Also, another thing is when you have 70% occupied, you're not losing money, right? But if you're a single families, if you if there's a consideration, if you don't have tenants, and then you only if you go negative, so people will basically, it's come down to the mindset. It's a speculations, right? Because there's no cash flow considerations when you're buying expensive market. You can't cash flow. So when the market dip down, so a lot of investors, or the cap in the interest rate go up, right? Then I I think there's more risk, and a lot of investors go into single family space. I mean, that's good for them. That's making money, and I think that at least 1 or 2 years of craziness still going on. But I mean, we just don't want to participate in that, because you know what? Yeah, it's, even when I go to Texas, right, I see single family deals, and they are selling me single family deals. You can still find this properties at 100K a door, or US anyway, and then you can rent $800, $900 in Texas. It's not bad. It's not bad, honestly. But when I look at, it's hard to compete with multifamilies. I can buy I can buy per door, per rent much better on multifamily. It doesn't matter. Like it's come down to, because it's different product, but at the end of the day, it's really hard to compete with multifamilies because the cost of sharing a walls and sharing a roof and sharing HVAC, everything share, right? And then sharing the operating costs and the loan, everything. It All this thing is a scalability thing. It's kind of by design it that way. Um, but I heard news that Wall Street is going to single families. They're competing with single families, and maybe there's a new investment grade. I don't know, right? But again, it's come back to things. Is hard to, unless you're gonna buy in a bunch, and even in a bunch, you kind of have to devise a new strategies to understand 50 properties all scattered calculate, let's just say that, right? And then you have, it's just not efficient, right? And they are good, and, and unless you can average everything, and but there's only so much average you can do, different area, different street, different dynamics, different buildings. So maybe we eventually can devise that kind of model to address that. But I think it's, and then, like, and then the wholesaling thing and the whole buying thing too, right? Um and and we just, yeah, we, and the demand of single families is still, in terms of selling to investors, I just call it that way.
Mm.
There's a lot of investors not going to, like, for example, I would, at at this time in the stage, kind of predict future. It's hard to, when you buy, it's one thing that you prefer to buy or not prefer to buy. Another thing, but you have to look at the resell. Who can I resell to, right? And one strategy, at least the broker is trying to sell me, is they said, you can sell it individually. Okay, well, think about, I'm going to buy 100 homes, I'm going to resell it 100 times. So am I doing myself a favor? You know what I'm saying?
Yeah.
The only ones making money is the broker, man. He's gonna do it 100 times, man. But yeah, it's um, I think, well, and you mentioned about the the interest rate. One thing about interest rate is, when you're doing an commercial, obviously the interest is higher, right? If we talk about 4% comparing to 1.6%, or like 1%, we're getting residential, and so that's one advantages. But but it's really hard to and also another thing is really hard um to scale. Even if you want to pull two or three investors into single families, you kind of, I guess another way is to they buy a portfolio. But yeah, no, the selling of this one portfolio is always going to be challenging because there's only so many people who would like to buy that, and that's a supply and demand on the investment type. And apartments is a lot of capital is still is actually coming from the office and the retail and the shopping center to apartments. I mean, it's make a big chunk of, I would say, 30% of the whole investment arena in terms of commercial real estates. So again, it's come down to invest in something that is going to stay there for long term, right?
Yeah.
And at the meantime, single families may do well, and I think it will, to be honest. And I just don't know how long, right? And you could be careful for that.
Yeah, that's cool. I just have one more question. I was wondering, when you're sourcing these, like you're saying, it's getting harder and harder to find good deals out there. You normally go through brokers, or do you have relationships with certain entities to source deals in the US?
Yeah, no, I go for brokers. I do everything, honestly. There's no one, and I would like to say there's one source that is good, but in fact, like, because it changes, that's basically what it comes down to. A few years ago, you can work with brokers and get good deals, and nowadays, and you still do, right? And then it still pay effect. Like, to be honest, it still play effect. It helps when you have that relationships. It's always, we're in the relationship business. The broker will give you favorable informations all the time. if you have the relationships, if he or she knows you for a while, that's still the case. And in fact, like think about that, at the end of the day, um, it's more relying on that in the competitive market, because now it's competitive because there's more player at play, there's more buyer coming to the market. So it it will pay off when you know that persons for a few years and you know that they see you for 5 times, then to then you don't have um, relationship with them. But to answer your question, we do a few things. We do a few things. We also do direct contact with owners, right? So we also have some success getting to know individual multifamily owners, and because um, as 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 we all know, not everyone's want to work with agent. And many of those is a small mom and pop, 60, 70, 80 years old. They just don't want to deal with corporate, right? They don't want to deal with, the guy with a shirt and a tie. So I actually have some success, and then they will, and they will reply you back when I do direct mail, direct contact. And yeah, and honestly, like I still do internet browsing for looking at deals, and not that's not so much of getting the deals right on the website. But one thing what I find is, as you dig and you find new brokers that you haven't seen before. That's a saying that's more real estate agent than listings. And last year, I can certainly agree to a degree on that. It has happened on single families. It's actually I see that there's a lot of new multifamily brokers, even in the market that I thought that's only okay. There's a few brokers that I know of. In fact, I know more can create new connections to the market that I'm already active in, and that's brokers I never know before. And by strictly browsing and see their listing, and then they might have something go on, and they certainly usually have, but they just not want to share with you on the first time, or unless they don't put everything on the website. They may put 5% on that on the website. That's kind of what I experience it until you create a relationship, and the feel that you're not just a guy that come on from a course like from mentorship or things like that. Then they're willing to share more. Yeah, they're willing to share more. So, yeah.
Okay. Thank you.
Yeah. No. It has been while, and
Yeah.
I take a step back on all this meetup and Zoom, and actually served me well, because I found that actually I can't keep up with the relationships um um as you're doing too much, I guess. I never think that's too much, but it is too much sometimes. And it's good to have conversation like this. And how about yourself? Are you active in Calgary? Are you active in what you're doing these days?
Well, actually, I just sold my properties in Toronto. They weren't really cash flowing, but I had a substantial capital gain when I sold it off. So that made sense.
That's
And
that's amazing.
yeah.
Congratulations.
Thank you. Yeah.
So
And just recently bought a home here in Calgary for my primary residence.
that's great. It's a single family, so or
Single family.
families.
Yeah, in Citadel. So that's where I'm moving to. So then, yeah, I've been involved in looking into different cash flow streams. I've taken a 2-year training course in stock investing, so I've been looking into that. I've been looking into precious metals. My parents own properties in Dubai and India, so I've been looking into seeing what to do there. Yeah, and then just keeping my eyes open to see how I can grow the wealth further, and see what kind of opportunities are out there.
Hey,
So that's why I attend all kinds of Zoom seminars and a few horizons.
hey, if you want to partner up and on the multifamily side, like and that's different entry level, I would say, right? That's like individual investors want to invest small chunk, or you want to partner up, and we definitely welcome the conversations. And hey, it's on the smaller side, then on the smaller individual investors, then those figures that we showed,
Yeah.
uh, that's kind of more makes sense for individual investors that just want to be limited partners. But if you think of like owning, like for long term, sounds like you're a long term investor owning things, then we can talk about partnerships on a more intimate level. Um, Maybe it's more investment capital, but then you own more, you be a part of the ownership. So something like that. If you think about that, just we can talk about later.
Yeah, sure. And I think I'm in your email list as well, right?
Yeah,
I think I'm getting, yeah, you guys are looking into a few different areas of like Ohio and stuff. So I've been following that just to, uh, yeah, I'd like
yeah.
to do more research and, learn about something before I get into it. So,
It certainly there's infinite amount of things that you
yeah.
can do, and it sounds like you were touching on a lot of those. Many of those you talk about Dubai, probably I had no idea what is that. I know
Yeah.
what and precious metal. Um, that's good that you really talented that because that way because I find out I I can only focusing. Maybe one is pretty less, but I mean limited amount of things that I do well, and I just um I focus on that. But
Yeah.
if you can do well on those, and I mean it makes sense because you at the end of the day what you're trying to you mentioned that you want to have multiple stream of incomes,
Yeah.
and with that you have to have like the more diversified is better, right?
Yeah. Like if you look at Warren Buffett, like he's like the king of stock investing, but he also owns an insurance company, Geico. I don't know if you know about Geico.
Oh yeah, the US, yeah.
It just cash flows like crazy, right? He's a long-term investor, but he still has cash flow stream. So he believes in like having different streams of income as well. So
You read a lot of him.
oh yeah, definitely. I follow him. I like what he does. He's a good value investor to learn from. So he
You
buys
probably read
at
his
half.
book. You probably read his book in well, not his book, but it's Intelligent Investors. Then
Yeah, by
Graham.
Graham. Yeah, that was his mentor actually. Yeah, he believes in buying companies at half its worth. So if you can calculate how much the company is worth and buy half its price, then you're a value investor.
It's that certainly that the what you mentioned is that buying it right,
Yeah,
and you will never well, buying right is obviously you have to generate the deal flow, right? You have to do enough marketing to do that, because and also um, doing the prep work to buy those. Of course, those opportunity comes and goes, and it's not normally what you would see on internet and a highly publicized deal, that kind of thing, right? But no,
yeah.
it's I so you is did you go to Omaha and see his live speech like no we or Zoom? I know he was doing Zoom last year. Like do you are you one of those guys to be joining his conference and because he has the annual meeting right every year, right?
Yeah. He has his annual meeting. Yeah, I follow that on and off every year as well, and a couple of people who actually follow him as well. So they all have the same school of thought.
Hey, that's he reached to be the number two wealthiest people on earth, and probably he's probably doing quite a few right things that is right, and yeah, I pick up that book, and then I just cannot concentrate. It's a lot of details in that book. I and then I and then And then I said I'm going to pick it up again, but yeah, that was a long time ago. I probably won't think I will.
Yeah, it's a lot of reading, but
Yeah,
there's a lot of good stuff on the internet and stuff. So you just keep learning and learning and learning and pick up
keep
trial
learning,
and error.
and
Yeah.
considering buying the Calgary home and selling the Toronto home. This apparently
Yeah.
you're not the first one that I talked to for the last um little while, maybe a month ago. I saw another investor, and she's not here, but she's based in Toronto, but he buys something in here in I think it's not Coventry, but not Bacon Hill, but what's the neighborhood that's anyways, northwest neighborhood. My point is that some I do see happen more and more often, just like people going to US, but it's also people are also migrating from expensive market in
Yeah.
the east and the west come to Calgary. Hey,
Yeah.
which is a great thing.
Well, Calgary is the only affordable place left, or affordable city, major city in Canada.
In Canada.
Everything is off the table, really. Vancouver, Toronto, Montreal, Ottawa.
I say this a few years back, but I didn't know it take a few years to materialize. I that was before the last 2 years, I would say. But I think it's yeah, I guess it gets you right, but the timing wasn't right. But yeah, no, it's you're right. And Calgary, um, and many people, including myself, is like scratching our head. You know, what is this? What is supporting all this, right? Like
Yeah.
the economy, and then COVID and the oil price, and it's just show that there's a lot of capital actually in the system, right? We see that in the capital raising, we see that in real estate, right? And that's and they just print so much money. I think they just print so much, and all this capital has to channel to the real stuff. So
almost always, yeah, always.
it's good chatting with you, and
Yeah, absolutely.
good to see you doing well, and get your probably show in Toronto and buy some more in Calgary.
Yeah, for now it's just my primary residence in Calgary, and then we'll see what after. So,
nice to catch
yeah,
up, and
yeah.
hope you well. And well, when this all get better, we should go for honestly, I'm careful, but you know, there's only so much carefulness you can do because like nowadays you can't even do this. Getting too crazy. I don't know.
Yeah, well, in Toronto, they just announced it's a 24-hour curfew there. You leave your home without a reason, you'll get charged. You'll get a $750 fine.
That's totally infringing of your freedom.
Yeah. So I don't know. This is usually anything that happens in Toronto follows you soon after.
It's just well, this is I don't know, like you know, and this, I don't know whether this is right. Like you know, it's there's certain things that we have to be careful, right? You don't cop off to people, but
Yeah.
you know, but in terms of like the limiting your physical, like I thought this is not China, man, but
Yeah, it's becoming like
apparently I'm not haven't got a memo yet. It's ridiculous.
Yeah. Yeah, no, we'll definitely catch up after, I guess, once the protocols are.
You think so? Oh, I hope you're wrong, man.
I don't think this restrictions will. I don't think they're gonna get this under control until November, really. So
yeah,
it's gonna be like that for a while.
I don't know what is real and what is not anymore.
Yeah.
Like including the case, including the stats, including I think you may know, apparently in Spain, Barcelona,
Yeah.
you're not so obviously public transit you have to put on masks, right? But apparently you cannot speak anymore.
You cannot speak anymore in Barcelona.
Public transit.
Oh,
The newest findings. And
Yeah.
don't challenge it, right? Newest findings.
yeah,
It's speaking will
yeah.
will
You,
spread the germs. So I don't know when they can stop us breathing, eh?
yeah. They're like, don't breathe.
Yeah.
You're kidding.
Like this. Well, I put a yeah. But as soon as people keep following, I'm pretty sure they're gonna keep doing it.
Yeah. Well,
It's just how they went well, man.
yeah. Very unpredictable for sure.
Yeah. Hey, nice chat with you.
Yeah, absolutely.
And
Nice talking with you.
thank
Yeah,
you for
really.
joining. And wish you well. And
Yeah.
see, there's one. I don't know. Is it Fleeter? Hi. We're ending this call. And thanks for joining.
Hi, can I just ask a quick question?
Hi. How are you doing? Is it Fleeter?
Yeah, Frida.
Hey, how are you doing?
Good. Yeah, I'm just curious about what this meetup is about because I joined at like 1 o'clock, I think, because I saw the time is starting at 1 o'clock, but when I joined, it's already like FAQ question.
Sorry about
Yeah.
that. Yeah, no. It's kind of my bad. I didn't pay attention to your waiting, so my bad. But it was 1 o'clock. Mountain time and Calgary. So this meetup is about multifamily investment,
Mhm.
and we're in Calgary time. I don't know which part of the country you're in, the time zone you're in. So
Oh.
that's probably the misunderstanding. Hey, apologize for that.
Okay. What is the next time for this?
We good questions. We usually have a set of monthly meeting before the pandemic. But before the pandemic, we usually have second Saturday of the month at 1 o'clock, or we're gonna have if you sign up of our um, um, registrations, then what I do is actually before that I would send reminders. And then but this is a monthly meetup thing. So we at times meetups is more for sharing and chatting like today. And but we have Zoom call that we talk about updates, more delivering process on Wednesday sometimes. But it has happened more more the times at the beginning of COVID. But yeah, if you have specific questions and you want to know more about us, you can certainly connect it after this. Yeah.
Okay. I'll do the registration.
Yes, or send me the email and what's your email address? Then you can direct DM me if you're comfortable, and then I'll share you the registration link.
Okay.
Yeah, no, it's or just go to our website and just get to know us more. Whatever that you feel comfortable. Yeah.
Okay. Thank you.
Hey, thank you, and nice chatting with you, Ryan, and nice chatting with Lita. And thanks for seeing us.
Yeah.
And hopefully we can see you in person soon.
Yes, absolutely. Soon. All right. Take care.
Take care.